Happy New Year's, everyone. How you guys doing? Wind down. Happy New Year's, guys. You sir are a champ for showing up. Some people might say I'm crazy for hosting this at 12:30 p.m. Eastern time with a massive hangover. But I say I wouldn't have woken up otherwise. So it's good to have goals, you know. How much of the stream is going to be J Fresh perturbed about the croissant man? We'll try to keep it limited to a 30-40%. I'll do my best. It's it's going to be a lot, I'd imagine. Rightfully so. Gherkin J Fresh straight up murdering people on Twitter. I love it. I don't. I just want people not to say things that are either bullshit or lies. Um, and then I want them to not be popular for being idiots. Those are my two goals for Twitter in 2024. I feel like it's going to take a lot of work. Thanks, Sweet Lou. You just don't understand the flows. You don't understand the macro, Popcorn. You expect quality to rise to the top on Twitter? No, I don't. I'm not delusional. Well, good. It sounds like I've confused you then. You are crazy for hosting this at 12:30 Eastern. The massive hangover. It's pretty bad. I don't feel well. Um, but we're gonna be okay. We're gonna get through it. You better be training more LLM bots to wrangle the malformed means. Hmm. I just need fewer GME related followers. The whole platform's going to be working against you from the top down. Godspeed, Pickle. I know. I know. So, do we want to get started with like memes? Blue chips? What do we want to do? Because we got like an hour until the quants show up. So I need some help finishing this pozole. Um, I've I've got nothing for you. Blue meme, degenerate memes. Okay, so we're gonna start with degenerate meme stacks. That's what it sounds like. Not we do SPX with the boys. You get a New Year's smooch from you. Thank you. Happy New Year, Sisyphus. I can't wait for another 252 trading days of you complaining about your commodity stocks moving 5 cents. It's going to be exciting. Upsquart. I'll get to Upsquart. Upsquart looks not great. Let's get GME out of the way so we can lower the viewer count. Uh, nothing particularly notable in GME's options chain. There was one thing though. I just want to make sure I'm not losing my mind. Oh, you bitch. So yeah, total dealer gamma was collapsing. There's still actually like a decent amount of long call interest on it, but the short puts are starting to fall off. Um, that's usually not bullish. Sometimes it could take a little while, but once the short puts start kind of closing out, usually the price drops because most participants move towards short calls. Um, Dealer Gamma and Delta are still positive, however, so it's still going to be jumpy within like a 50 cent to $1 range from spot. So it can kind of bounce around just because the market maker is still buying the dip. I think it'll turn negative on both of those probably this week or next. But it's been a very slow bleed off, and that's something you can kind of see here when we check out the tips. Is that short side liquidity has been very slow to accumulate, both on XRT and GME itself. It is accumulating, but not at the rapid rate that we'd previously expected, right? I think part of this is just it's universal across the like all of these like meme basket and like short vol stocks, is that dispersion's really not in a favorable place, and vol shorts are a little unwilling to go short right now. And that's something we see on Upstart, we see it on Fubo, we see it on Siri, Macy's, DDS, well, not Beyond, but that's kind of in a different story. Top, they're really not shorting very hard, and I think that's because largely there's just a lot of risk that the market keeps going higher, and that's not a chance that like short vol wants to take. Like they don't want to spend all their time using what little liquidity they have available shorting against index pressure, right? It's a big waste of money. So yeah, I think that's like a theme that's kind of persistent across all of these. Upstart started to see a little bit of shorting on Friday, a little more on Friday, and some earlier in the week, as it starts to like kind of break down from Gamma Max, and Gamma Max is kind of now like, it was kind of like here, and now it's kind of drifting away from the stock price. So we're seeing a lot more out of the money sold calls. We're seeing delta neutral rise up, or gamma neutral rise up, which is about here, GN, and that's right around $40.50, and then delta neutral down here at like 35, right? So those are all getting closer to spot over time, and usually this is bearish. This is like a breakdown on the call side and an accumulation of options interest at the money or out of the money to the downside. And we're definitely seeing the larger amount of sold calls shorting vol. On the upside, I think vol's gone from like 230 something down to like 100. So it looks like they're well positioned to continue shorting it. I would expect the biggest pain here to come from the Fed meeting. If the Fed meeting doesn't indicate that there's going to be rate cuts in the first half of 2024, that's going to be really, really bad for Upstart. And reaffirm the bear case. Fubo's just chopping. I would say slowly across the curve, they're kind of accumulating more short position, right? We see it's a very, very slight accumulation of the short position there, but nothing really heavy. And part of that's, this is just massively liquid. It takes a lot of shorting to really move the needle here. And while we may see some more covering, I think it's more likely that we see a small reversion in Russell and liquidity continues to be provided by the index, right? So I still think like 3 down to like 264, 250, maybe. 250 is a bit of a long shot, but 3 to 264 is going to be, our range on a breakdown here. And then hopefully find some support going into the next earnings, and hopefully the plan for profitability stays on track there, right? Top. So this one got a little spicy this week, and then I kind of tried to warn everyone Thursday that they were prepping a bit of a big short on it, and they used up a lot of that liquidity. You can see some of that prepping going on here. As liquidity kind of reverses. So this is covering, this is shorting. Actually a little hard to see in the tips, right? But the float's so small here that it's really easy to see it on something more basic like this. And then end of day Friday, we started to see more covering again. Now, if the next impulse of covering is going to be strong or not, we don't really know. But they got a little bit of a reversion to mean here, and then I'm looking for support somewhere between 2 and like $1.80. And this did come with a little bit of vol crush, so options should be a little bit cheaper down here. And then I think I probably want a little bit of theta on those, but the overall trend of covering is continuing, right? We're seeing more ETF liquidity open up. We're seeing more underlying liquidity open up. So hopefully we're looking at a scenario similar to something like this, where we had some volatile upside moves, right? Where liquidity kept drying up, and then eventually that led to a larger breakout. And you can see liquidity here gets really, really blown out. I don't think you'll see that hue shift anywhere else. So yeah, that's kind of it in top, and on a technical side, that's kind of in line with this like ongoing expectation. I think you want more liquidity than or more theta, sorry. I think you want more theta than Jan 19. The reason being is that they are releasing their preliminary report on their turnaround plan, I believe on the 19th, and then they're going to be releasing their actual unreported earnings in Feb, and I'm not sure the date for that. So with both of these events, obviously they present the possibility for a lot of volatility, right? Camera blur? Macy's is getting bought out. Oh, I'm not shorting Macy's. Yeah, I wouldn't fuck with that. That's probably not worth shorting. It's probably going to stay around $21 until there's some sort of change, or unless something happens with the buyout. Beyond will be the next one that we look at. Let me go out to the 4-hour on this. So Beyond, we've seen quite a lot of shorting, almost as much as they have available. Pretty much everything that was covered on its 100% run up, right, has been now shorted here. As you can see, we're really close, and they may not even have as much liquidity this time as they did last time. They may be even a little lighter due to those compounding fails, right? And so, and this is still holding that put wall at $9, which is remarkably impressive given the amount of shorting they've done. Remember, that prior to this, that shorting, brought the price down a little bit more significantly. And the the cost to short relative to its impacts is waning, right? And so that's actually pretty bullish. As far as time frame, I still think more is better. Um, these can still drag out a while, even when it appears that they are completely fucked. And I believe the hold on, let me look at the neutrals on this real quick and adjust those so you guys can like screenshot a better chart here. One second. So we're looking at Delta 1459, GN 1529. Gamma Max is just absolutely skyrocketed. Okay, so we're gonna look for Gamma Max to start coming back closer to price, closer to spot. Gamma Max is at like $95 right now. I don't think it actually is, but it's probably somewhere in like the high 20s or something like that. That's coming back 1584. Okay, so Dealer Delta and Gamma have slipped just below negative, but they're kind of starting to turn around. Call interest is picking up as of last Friday. Charm's still negative, but DN is 1459, GN is 1529. 1 second. All right. What did I say? 14, 1459, 1529. We can forget about, or it's like $90. That's irrelevant. All right. So that's what we're looking for. Ideally, these will come back closer as more call side interest builds up, and they'll move closer to spot as spot moves up. And then Neo, not really a meme stock play here, but I guess we could talk about it. It's still kind of chopping at the 200 MA. I cut some exposure to it because I want a little more theta. But I'm pretty bullish on this. I mean, besides the $2.2 billion investment, I know BYD cranked out like a larger than expected number of deliveries. I believe Neo did too. Um, I think China is going to put as much money as they feasibly can into turning their economy around while the U.S. economy takes a big dump. So, um, this year we're probably going to be looking a lot at some Chinese stocks and emerging markets, and mid and small caps. I think those will have the best resilience. They have good cash flows, and should be a good year for them. I think that's generally the broad consensus. I don't, most people are pretty much in agreement that that's where value is. Although I think there'll be maybe more value in being short the Mag 7 at some point. But I thought that in 2023 too. BTC while recovering degen stuff. God, I hate it so much. All right, fine. Um, Um, slight improvement with each one. So slightly expanding there. I would say BTC looks like it's kind of setting up for a triple top. I don't expect the effect of the ETF to be bullish or the period following the halvening. I would say both of those are probably going to be pretty bearish. This because of synthetic liquidity. This because the cost of mine goes way up. I would keep a pretty careful eye on a breakout of either 44, 44.70, let's say 44.725, and any break below, well, the 50 MA, which is, roughly at 4,600. 40,600. So that's where I'd be looking. In the meantime, probably just more consolidating chop, right? Not really something you can sell theta on. I mean, you can, but it's garbage. So yeah, I mean, pick your poison. I think down is more likely. This is kind of run a bit too long. But I would say down to the 200 trend first quarter of this year would be what I would expect. So maybe a return back towards like 31, 30, maybe like 32.5, 32.50 by then. 33.5, 33, let's say 33.5. 33.5, 32.5, something like that. It gives you about $1,000 range. Are there any other ones? I know someone asked about something else. Was it Carvana? Carvana. Started coming down already. I mean, it's definitely, it's without a doubt the trade is blown out here. I would say it's starting to confirm some negative levels. Gamma neutral, delta neutral have been moving down for the last 2 days. Dealer delta and gamma are still positive, so we're really not there yet for a confirmation. But charm flip negative, and call interest is falling off. So I would say it looks pretty good to break down, but you might need some theta. I know the last time I shorted it, it took forever. I ended up shorting it like back here, and I had to wait through the whole fucking breakout, and then like it broke down, but then I was just like at break even, and this shit took like a month, and I ended up having to like roll my puts out. So be careful of that part, that really grindy downside part. But I would say risk at 53. This isn't a terrible, like, I mean, kind of the price targets I have here aren't really terrible. I don't really hate this setup. I would maybe move this to like risk, and then that to a PT. That's like a second, and then tertiary price targets. So maybe enter short, then scale, flatten. Kind of like that. I don't hate that one. All right. I think that covers most of the memes, unless someone had one they wanted to ask about. Siri, yeah, I probably should still read through the report on that. If you actually own the underlying, there's an obscene amount of money in the share lending. D's nuts. I'm sorry, JFresh, that ticker is not found. Can you please say 32.5? I did say 32.5. Lucky you. Now that Tesla is below 250, are you going to consider shorting? Yeah, so we'll start on those in a minute. Could you take a look at CF? Millions on calls spent over the last 10 days on an almost empty chain. Okay. Decent consolidation, broke out of the downtrend, finding support on the 50. Also support on the longer term trend. I don't think I have options info for that, but I could, if you give me a second, I can take a look at something else. Let me see if I can take a look at the chain here and see what you're talking about. Because part of this may be, you know, the breakout failed and people are selling shitloads of calls, right? I would say 80 looks kind of bullish, but yeah, there's a decent amount of call interest to the upside. It's pretty long dated. And it should be in a positive gamma environment right now. So I would say it looks like people are maybe buying calls either to get assigned on, so they could be short, or they're bullish on like trend continuation. But it's pretty obvious that like a bounce here, a confirmed bounce here above 80, you know, would have a little bit of range. Maybe even, this is kind of questionable, but I would say a bounce here would have range up to about 88, 87.50. So a little bit of room on it. I mean, not something that I'd probably want to play, but I don't think it's a bad setup. Just be aware that those might be sold, right? Which is what it looks like it ran into, you know, here, is that, you know, it had, you know, kind of an insurmountable amount of sold calls. And it just like people just kept selling more and more and more, and then it failed, right? So, you know, those calls at 85 might be sold. Booking. Still looks like it's starting to fail. I went short on it last week, just short shares, because I couldn't open any spreads. I'm gonna try to open some spreads this week, but I think it still looks bad. I still think a test of like, if not 3450, like 3400. But I mean, either way, that's hundreds of dollars a share. Have a look at commodities, please. BTU, DVI, UGI, DVN, just oil. So oil was showing some improvement this week. There were some attacks over the weekend that I guess the U.S. Navy effectively dealt with, but that doesn't mean attacks are going to continue. I would say we're likely to see commodities move up on that news. Also, you know, China's still trying to stimulate their economy. So I would say that commodities are in a space where we could see them spike rapidly. Otherwise, I would expect commodities to rise with the business cycle, maybe into the latter half of 2024, as hedge funds and investment managers seek to diversify out of the Mag 7. Which is kind of what I'm hoping for, like the biggest spike, right? As China's economy kind of recovers a little bit, and asset managers start to seek like a little more diversification in commodities. I know uranium's run really hard, but I would say nat gas, oil. I could see oil maybe hitting, 80, 90 a barrel in the first half of 2024. Especially if the conflict in the Suez Canal and Red Sea continues. Because if they have to start diverting ships there, not only does the demand for fuel on those ships skyrocket uh, on the demand side, but it'll raise the cost per barrel as well because it'll be slower to get to market. I didn't cover cat. I don't think there's anything to cover here. It's just testing 300. I don't think it has a lot of room to the upside. Um, but it doesn't look like it's coming down yet. So I think continuous tests of the 300 range. I think it'll continue to push into that. This is on the weekly, by the way, but I think it'll continue to push into that resistance until we get some reason for failure. It doesn't look like anybody really wants to buy it much higher. It broke Gamma Max a couple times over the last 2 weeks, and then kind of slipped back below. Gamma Max is starting to come down now. So's price, but not very much. So, and I don't like playing the short side of cat. It's sometimes very unreliable. If we get a broader downturn, you could, but you could also just short Dow and you'd probably do better. I covered Beyond. What's a NASDAQ having about 5 to 6% more to run before it falls precipitously? Um, I would say it depends largely on where we see the reversal, right? I think if we get a pullback to like the 1600 range, right here, like these two green lines. I think if we get a pullback, or 16,000, sorry, if we get a pullback to there, recovery, and then a move higher, I think that could have the potential to go maybe like 3-4% over where we're currently at now, which would give us like a target of, oh, feck. Like there, bounce back. That's 4% back, so like 17.5, I would say. But again, it really depends on how steep this correction is. The less steep this is, if we don't get like a 5% drawdown soon on NASDAQ, I don't have a lot of faith in it going up much higher. No chance of looking at LTHM. Why? Has that stock ever stopped running? Hold on. That's not it. Wait, is this something else? This is something else. Is this lithium? I don't care about lithium. Lithium's garbage. Yeah, lithium's trash. There's so fucking much lithium. I don't know why people are bullish on it. I'm sorry. I was thinking of something else. LVMH? Is that what I'm thinking of? Last week you considered PayPal as a value trap. I think PayPal's starting to get. Actually, last week I said I don't like the company, but I think it's almost cheap enough. And I did mention this last week that it's getting to a point where it may be worth picking some up, but on a pullback, right? So maybe if it pulls back to like 57 and finds support. Otherwise, yeah, I think increased competition just makes this kind of a shit buy. But there's some opportunity if it continues to find resilience and rates get cut this year. Jenny Yellen spoke at Livin. I bought a call, it went straight up. Okay, that's fair. I just don't like lithium broadly. I think there's tons of it. I don't think that we're gonna run into any fucking shortage ever. Not only is there tons of it, there's tons of money invested into extracting it and mining it, and I think all of that will come to fruition long before the demand for lithium ever reaches a point where we could experience a shortage. You don't have options info for BN. Well, I don't know that. No, I don't. You're right. What the fuck is it? Brookfield? Oh, they've done well for themselves. It looks like this just ran with broader financials. Financials did really well this quarter. JPM, BAC, Wells, BX, all of these just rocketing, right? So I would say just in line with the rest of the sector. It doesn't look like it's outperforming or anything, but no, I don't have options info on it. It looks blown out, but everything does, and everything's looked blown out for a while and keeps going up. So I'm not looking at fucking AMC or Bobby. Bobby doesn't even exist. How could I look at it? No, why would I talk about Con? What is this? This is another over-shorted shitty retailer that doesn't make money. I would say it looks like it's blown out its options chain. No problem, Diesel. Can you look at Sears? Fuck off. Oh, wait, did you already go over IWM? Sorry I joined late. I didn't, but we could. Everyone's interested in small caps right now, which is justifiable given how much it's run. So IWM, as you all are well aware, broke and stayed above Gamma Max for quite some time. Um, about a week ago, I think it stayed above Gamma Max for about 3 days. Drifted up with Gamma Max over the last week. It's starting to fail now. Big drops on Friday's expiration in both Delta, in Delta Gamma and Charm. Although call interest is remaining kind of steady on it. So I would say if we see a breakdown at 200, it's probably got some room to move. I would be focused on the mid to low 90s. So from like 95 to 92. If it breaks down below that, um, well, it could go down a lot. Yeah, that's where I would focus my attention right now. I would either look for like 92 to 95 for a bounce or a continuation of the breakdown. But I think obviously Friday was very bad for it. That may continue. Time to sell or maybe wait on what the retailer that you just showed me. I mean, probably time to capture some profits if you rode that entire run up, right? I would say at least consider scaling out a bit and taking some of that was a big move. Riley. Ew. Oh, they have not done well. Still issuing their 20% fucking dividends. Jesus Christ. Nice dividend. They should stop paying it. That's a lot of fucking volume there. What's going on here? Huge amounts of debt. There's interest income. Yeah, I don't like it. I'd have to dig a little deeper. It looks like they have a lot of mature debt that they're having a problem paying off. I don't like SoFi. You just wanna own a bank that fucking does nothing for ever. Is that what it is? Why don't you buy a real bank? Seriously, why do people buy SoFi? What's the draw here? It's cheap. I mean, it doesn't even have a dividend. No, not like GameStop. GameStop's not a bank. You get like I think preferred shares on Key. Is it Key PK? These are like 7% yielding with the same amount of upside potential. And if the company goes bankrupt, like if they blow up, you're at least in line as a creditor. Some of these are even better. I think the PL. Yeah, this one's 7.22% yield. I don't think he's based in New York. He got popular due to its crypto exposure. Ugh, they suck so much. Do you know how many shares they have? They have an 885 million share float. And they're still worth less than the one they SPAC'd. The fucking company doesn't make any money. Their margins fell through the floor last quarter. And they buy baseball stadiums. Oh, not to mention everybody's fucking student loan payments are like deferred until the end of the year, right? So everybody with missed payments isn't going to pay until the end of the year. They benefited from the larger move in the financial sector, but I don't really think they're a big. I don't think they're a very big deal. They dump their divvy yields into SoFi every month, quarter. I don't get it. I don't know why people are obsessed with it. I mean, like, I get they have a lot of student loan exposure, and people are really excited about payments continuing, but they don't make money. Like, their performance over this year is good, but so's everything else, right? They have unbelievable amounts of debt. I don't think any of it needs to be refinanced anytime soon, but it will probably have to be refinanced at a higher rate than they got it. They're making 756 million a quarter in gross revenue, but their free cash flow is 90 million. Yeah, I'm not about it. That's terrible conversion. Payments. Yeah, payments are on hold, I think, until. Or there's no negative consequence to not paying until like September of this year. Something like that. So GME's still sitting on all that money. Yeah, maybe. Or they've deployed some of it somewhere, but we'll see. Alright. Let me see what the nerds are up to. Hey guys.
Oh, hey, what's up?
What's up? Oh, hold on, let me get you. Someone say something.
Happy New
What's
Year.
going on?
Okay. I think your volume's up. Should be good. How are you guys doing? Happy New Year.
Yeah, Happy New Year. We're just chilling, trying to.
Are you guys hungover too?
A little bit. I was just telling him I only had about a bottle and a half of wine last night, equivalent. So I'm pretty good.
Oh, that's like
Could have
your
been much worse.
that's like your usual, right?
No. Uh, I think
I'm
I think
fine.
my kids. I think I would just like turn into a puddle and die underneath my children if I drink that much all the time.
Is a bottle and a half of wine a lot? I'm not a wine drinker, but that feels like not
It's-
very much.
It's a fair amount. I was doing the math for someone last night who drank a 6-pack of 7.5% beer,
Yeah.
like 72 ounces, and that's about 2 bottles of wine.
Okay.
So I drank like four or five of those beers equivalent.
All right.
And usually, if I'm like just sitting around during the week and I really want to enjoy, a couple IPAs, I'll have like 2 or 3, 7%.
So I had 13 Red Bull vodka doubles last night.
Oh.
Are you still? Are you still conscious?
I mean, I'm wide awake actually. The caffeine's got me going.
Oh my God, how's your blood pressure? Are you anxious about things and can't really understand why?
No, that went away this morning when I was cooking food. And I kept getting really angry about where I place my eggs in my refrigerator, but the irrational part of that is over now. I have a really bad egg system in my refrigerator. Actually, if we're gonna talk about some stupid shit to get this started,
yeah, we need to get more people in here. So let's hear all about your egg system.
So as you know, I have two like commercial side by sides in my kitchen, and then I have a regular refrigerator also, right? And I usually just use the regular refrigerator for like produce.
Wait, are the side by sides those are not the freezers, right?
So they are freezers, but they're not just freezers. They're just so it's like four coolers, and each one is temperature controlled.
And you choose your temperature. I get it.
Yeah.
Okay.
So I have like I usually have like
trying to do an accounting of where all this shit is going in your kitchen.
So I usually have like refrigerated stuff on top, and then the frozen shit on the bottom too. Sometimes I mix them up, like 3-to-1 or whatever I need at the time. Like if I go to Costco, I might have more freezers than refrigerators for a few weeks. But
you have a body, you got to put on cold storage for a few days.
you couldn't fit a body in them. They're really not that like they're not that
Not a
big.
full
Like
body.
you'd have to do so
mean-
much work to get it in there.
Well, I mean,
Yeah.
a giant.
That's what all the knives and grinding tools and things are
Well,
for.
right now, the top right one, I've got the fan on in it, and I'm trying to dry age my own ribeye. And so it's completely taken up, right? And that's normally where I keep my eggs. And now the only place I have for my eggs is the crisper drawer in my regular refrigerator. And so they've gone in there. And I have a lot of eggs, like more than I should have, like, I don't know, 70 something eggs. And the bottom of the drawer is slightly curved. So when I put the whole egg like pallet in there, it bends and all the fucking eggs pop out. And so I went to take it out this morning, and like 7 of the eggs fell out into the bottom of the crisper drawer and broke.
Oh my gosh.
Yeah.
That sounds like something
Be
that's fun to do
wait,
when you're
okay.
hungry.
So let's go back to the 72 eggs. What was the thought process behind that? How many
Well, I don't
eggs a
want to
day
go
do you
like
eat?
so Costco's in Brooklyn. I've got to it's like a hike, right? I don't want to go there often. And eggs keep a pretty long time, like couple months.
I actually don't even know, how long eggs keep. My family goes through like 24 eggs a week at least.
If you live in Europe, you can just like put them on the counter and just leave them there for ages.
What?
They
Is
don't.
it
I
like
don't
a
think they have to. I
climate thing, or
don't.
is it
Yeah.
just-
No, because they don't treat them, so they don't. So like in the U.S., we like scrub the shells and we remove like the protective coating that's on them, which makes them susceptible to getting salmonella and also makes their shelf life shorter. But in the fridge, you can expect an egg to last 2 to 3 months, right? And sometimes I use eggs for like bigger dishes, so I don't want to run out of eggs ever. Now, very rarely do I use all 72 eggs that I buy, but on occasion, I might. I throw out a lot of eggs.
Yeah.
But I'm never out of eggs. So it's zero I've
It's a
landed
hedge
on this.
position.
Yeah, exactly.
I think part of the pickle jar service that you sell to Dillionaire could be, you could include this in Pickles Picks. Just keep like a daily journal of your eggs, like how many you have, how many you used. I would actually read Pickles Picks if you included that in there.
This morning I made myself French toast with Grand Marnier to take off a little bit of orange. I had some Valencia oranges. So I made like a Grand Marnier and orange sauce for my French toast. That took like 14 eggs. That took a lot of fucking eggs. Do you have much?
What the hell?
It's
How much French toast are you making, dude?
like 6 pieces of brioche, fried it up. I gave my neighbor some.
Look at you in the holiday spirit.
Yeah, that's nice.
But yeah, I mean, it takes a shitload of eggs. So, because I mean, like if you batter it, so in America, usually like the French toast, you take like they take it and they just like dip it in the eggs and throw it in the skillet. But you're supposed to actually make like a custard on a cookie sheet, and then you put the bread on that and then refrigerate it overnight, and it soaks up all the egg shit, right? And
that
you can
sounds
get
a lot better.
Yeah, and you get like a custard, like it's like a custard filled hunk of bread, and then you fry that shit. It's amazing. You get some good flavor. You get some like more nuanced flavors in there that way too. You get like cardamom, add some like vanilla bean. It was good shit. I started making it when I was drunk last night.
Here's what I don't like about American style French toast. Take a piece of and everyone can do this. Is an activity for everyone. Just take a piece of regular bread out of a bag, dip it in syrup, and eat it. And tell me how close that tastes to whatever French toast you make. And it's like the same. And I don't know, just the thought of eating regular bread dipped in syrup just turns me off to it.
Yeah. Yeah, I don't. So my mom's side, I've never liked French toast, like, because it's gross. Like from diners and stuff. My mom's family is like deep Midwest, right? And they would make like it's like French toast, but they put sugar in it, like in the egg batter instead of just eggs. And so it doesn't require the syrup, right? And then they take like the remainder of the sugary egg and then they fry it like scrambled eggs. And I don't know what it's called. They just call it egg bread. But that shit's delicious. It's because it like better. Because like the sugar and the caramelizes when you cook it. Like when you fry it, yeah. And so you get like this like it's almost like a like a creme brulee on the outside of the bread. So you get that like kind of like crunchy, sugary film, that caramelized sugar glass. That's delicious. I'm all about that. But regular French toast can suck a nut.
Speaking of Midwest cuisine, and now that we're over the holidays, how do you feel about what the Midwest considers, I guess, dessert salads, which are basically just like mayonnaise and marshmallows and fruit?
You're talking about like ambrosia? That shit's fucking gross.
Yeah.
Yeah, that's fucking nasty. All of the variations of that. My family, of course, has one. It's like black cherry jello with like the Amarillo cherries, and then shitloads of Cool Whip and canned mandarin oranges. And that one doesn't even have mayonnaise in it, and it's still fucking foul.
The maraschino. Did you say maraschino cherries?
No, Amarello, the
Oh, I was
like
gonna
the
say.
dark ones, like you use in a old fashioned.
Yeah. Have you ever tried to buy a jar of maraschino cherries?
Yeah,
Holy cow!
yeah, they're very
They're like
expensive.
$25 for like a bottle.
If they're
What is
real
going
ones,
on
they're
there?
super expensive. Costco has them
I
sometimes.
I don't understand the economy of that at all.
There isn't any. It's just like I mean, if you need them, you need them, right? Yeah, they can literally charge whatever they want because
Yeah,
how
I
often
guess
do you
so.
need a
Yeah.
fucking maraschino cherry?
Yeah, I guess. Yeah, I don't know. I've always just been like, well, I can exclude that from this drink recipe.
It's inelastic supply. Great.
Oh,
Panettone
Well,
bread and butter pudding is the pinnacle. It turns out like cheesecake. Panettone's disgusting. And it's Italian fruitcake. It's nasty. I don't care what anyone says. Gross.
yeah. So another one, besides the ambrosia salad that my mom made a lot growing up is the Waldorf salad,
Ugh.
which has a lot of apples in it.
Yeah, I've had it.
the apple, red onion, cranberry sort of thing.
I mean, in the Midwest, you can squeeze mayonnaise into any pile of vegetables or fruit, and that's a salad. Because mayonnaise, remember, we think of mayonnaise as like something you put on sandwiches, but in fact, it used to be called salad dressing. And have you ever had Cool Whip or Miracle Whip?
Oh yeah,
Oh yeah, that shit. Fuck that. I don't like that stuff. I got
that's so.
surprised with
Yeah,
it
I mean,
once, and I've never eaten it since.
it's just like fluffy sugar. Could. It's not even like.
It's
It's
sugary
like.
mayonnaise. It's sugary mayonnaise.
Yeah, I guess so.
Yeah, that's
It doesn't have egg in it though, right?
why
So
are
it's
you
like a
saying
sugar.
it that way.
It's like sugar aioli.
Doesn't it have egg in it? I thought it did have egg. No
It has
eggs.
eggs white. Right.
I know it has more. I know
Uh,
it has more vinegar and more sugar, but no.
Cool Whip
Chad is
ingredients:
supporting you on the no eggs.
water, hydrogenated vegetable oil, high fructose corn syrup, skimmed milk, light cream,
Ugh,
and then a bunch of stabilizers and stuff.
that
So yeah,
sounds.
it's a
Why do you
sugar aioli. It's a
hold on?
corn. It's corn aioli.
Why do you have a jar of it? Right? Are you reading off the jar? Or did you just Google it?
No, I googled
Oh, okay.
it.
Thank God.
But no, my mom did used to buy that stuff when I was a kid, and I there were times in my life where I would sneak over to the freezer with a spoon and get myself a nice little spoonful of corn aioli when no one was looking.
Corn syrup aioli. There's nothing
That's
more
American.
American.
Yeah.
That might be the epitome of American cuisine. Corn syrup aioli. What about you, Dork? Do you have any weird holiday food things?
Well, visit my parents again.
I know you
Uh,
were trying to make Yorkshire puddings last night. Did you fuck it up?
no, my mom usually makes them, but she didn't feel like it. But we did have a rib roast that was absolutely delicious. It was sous vide at 137 for like 10 hours,
Ooh, nice.
and yeah, and then we hit it with a flamethrower afterwards. It was just it was perfectly done.
See, I'm gonna say something controversial here. Prime rib sucks.
You take that back, you motherfucker. You 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 bite your tongue so
Do
hard
you throw some
that
horseradish on it to give it some flavor?
we put some horseradish on it because the combination of horseradish and prime rib is fucking delicious, and
No,
you need to go back to that.
you
What
put
do you call that?
horseradish on it because it tastes like boiled meat, like all British cuisine.
I'm gonna put your head in a toilet and flush it after I take your lunch money.
I'm gonna be honest. Most parts of the cow taste the same to me.
Dude, it's so tender and juicy.
Really?
And
You
then,
think a ribeye tastes like a fillet?
Yeah, I mean, to me, mostly the difference between cuts is texture.
I find that some are beefier than others. Like
It's all
I
that.
think a
It's all that
ribeye. I
fat
think a
content.
ribeye is way more beefy than like a fillet or a New York strip.
I don't like any cuts of meat that have like big pockets of striated fat. I like the fat to be well mixed into the protein.
Wait, are you saying you don't like ribeyes?
That's exactly what he said.
No. I would eat it. I'd probably just cut off like the hunks of fat.
Yeah, well, you don't eat the fat, man.
Well,
You don't
then
eat the
what?
fat,
No one's
bro.
just cutting up the chunks of fat and just gulping them.
I'm just gonna see myself out.
Oh boy.
Yeah, I
I
would.
mean, like with the well cooked ribeye, I mean, you really shouldn't have much like just fat sitting there. You
I
might have
don't
like
know.
that big.
A
juicy belly.
lot of it should render out, but I mean, also like a well cut ribeye isn't gonna have like big hunks of fat in it, right? It should be well marbled all the way through.
But yeah, New Year's was good. You know, hung out with the parents, and we combined it with Christmas, and it was a good time. I got a work sharpener.
Oh,
Pretty
okay.
stoked to use that.
Which one is it?
Uh,
The bench one? Like the is it like the one that like sits on the counter and it's got like the little rod that comes down?
is this one's like it's shaped like a trapezoid, and then it's got like a little tiny guide for a like the smallest little belt grinder.
Oh,
Um,
okay. I know which one it is. It's got the little hand thing with the trigger on it.
no, this one's just like it's like a whole unit, right? That just sits there, and then
What is
it's
that? What are you drawing right now? Sorry.
Just penises.
yeah, it's a unit, but like you pull your knife through and it's got like a little belt on it. But I'm just gonna throw it straight on like the super high grit and just get all my knives razor sharp.
Oh, okay. I think I know which one you're talking about.
It's like a kitchen utensil sort of thing, more so than like a little portable one or the crazy rod guided wackadoo one that I'd never be able to figure out. The one that looks like a giant tinker toy.
Yeah, that's the one I want to buy. I want to buy the one with the like guided angles. That one's cool.
Those are nice. You can really get like a mirror polish on your blades with those.
Yeah.
But I'm not smart enough to use them.
I just have whetstones, but it gets tiring after like 6 or 7 knives. And then
Right,
I
or you do
always
like one bad pass and then you're like, well, got to restart.
yep, yeah. Yeah, it's like, oh, I knocked off the burr wrong, all right, like sloped the edge too much. Or you don't
Right,
like
or you glaze
micro
it over.
bevel properly. It's such a pain in the ass sometimes. So yeah, I
Yeah,
wanted to get that angled one so I could just, you don't have to think about it, right?
I
yeah,
just
and
buy
that's
a
kind of
new
what
$12 knife every once in a while.
you see.
Oh,
You
I
see,
need to
my
buy
thing
Jay
with it
Fresh
though.
like a good knife.
Yeah, maybe one day he'll get one. But the problem is he has kids, and so having a super sharp knife sitting in his kitchen probably not the best idea.
Well, you put it away. It's got a box. I mean,
He
right?
has kids.
The
Kids figure
entire
things out.
South has guns in their house, and you're worried about a cooking knife?
Yeah, my wife got my kids, my 8-year-old and 10-year-old, switchblade pocket knives for Christmas. That's cool.
Well, there you go.
One's blue and one's black, and they got to choose which color they wanted, and they traded and do all this. It was a fun experience. Very
Did they
wholesome.
fight with knives when like while they were trading? Like they have them
So
out?
far, we haven't. They haven't. I don't even know where they are. That's the worst part. I don't know that they know where they are either. So our 4-year-old might pick one up, but it's just how it goes. My 4-year-old was walking around with a foam knife, and I was like, "Is that sharp?" Because he's just kind of flinging it around. My wife was like, "No, it's not that sharp." And I picked it up and like felt it, and it's pretty sharp. So I
There's
took that
a.
away from him.
I wonder at what point in our lives we learn to be wary of knives. From a developmental
Um,
standpoint, like it's not because we're warned, right? It's because we cut ourselves.
Oh
yeah,
yeah.
yeah.
And we're like, oh fuck. But sharp knife is less dangerous than a dull knife. There's so when you're using it, yes, but an idle dull knife is definitely way safer than an idle sharp knife.
Yeah.
Oh yeah, a nice
Yeah.
I
yeah.
walked in front of, so I left one of my gyutos on my counter, and it, like the edge was hanging off the counter just a little bit. And I was just like cooking around it, right? And I walked past it and it cut the entire front of my shirt open. So if I'd just been like an inch forward, I would have just like gutted myself in my own kitchen and not even realize. I didn't realize it for like 20 minutes.
Yeah, no, like with the crazy sharp knives, if you're like cutting an onion and you just have your fingers a little far forward, you can take the tip right off.
But it'll
Like with
be
a
a,
dull knife, it'll catch on a
but you
nail,
can also
but like,
put it back on, and I've done that. It's, if the cut's clean enough, you just pop that fucker right back on, and it'll. I don't know. So far, it's worked for me.
gross.
Ew.
How's our
Did you
beer
even
count
go to the
doing?
doctor to get that confirmed?
I just,
Turned gangrenous.
I just like put some Neosporin in between the fleshy pieces, and then like smothered it in super glue.
Oh, that's so
The
gross.
medical field's mayonnaise.
Yep, it worked.
Medical mayonnaise. That's what I'm gonna call it from now on.
All right, do we want to talk about it?
Do we talk about the market? So the market did exactly my prediction, which was it went up until it went down. That was my prediction for this week, and it worked out perfectly. But the question on everyone's mind is this the end? Do we keep going down? We're so close, right? I know
Yeah.
Friday we effectively bounced off of gamma neutral.
We've been bouncing
Well,
off. We've bounced off it multiple times.
we did back
So we
here too,
bounced off it.
right?
Yeah. So your lower support is basically just gamma neutral climbing up over
Yeah.
time.
Yeah.
And whoever's selling puts is just protecting it with everything they've got.
So as we approach it though, the proximity of price to gamma neutral reduces the amount of market maker buying on the dip, right?
Yeah.
So
Yeah. So they have to sell delta to compensate.
yeah. So I think we're actually in a kind of interesting position now that we've lost the foothold on that higher range. Um Still need to break 4750 though. There's so much interest there. But if we do, I think that gets really spicy this week.
Yeah.
I
I mean, that's the thing too. Is I've been kind of looking at like the top end, right? Because I think that, I mean, sold puts aren't really enough to keep the market moving upwards without more leverage, and it seems like, well, at least on SPX and SPY, 16 times leverage
Mm-hmm.
is about what the market is willing to bear, and things start to kind of flatten out there. I haven't seen anything substantially higher than that, and that's basically where we're at. And so without more leverage, they can't go higher unless they get more sold puts to squeeze out.
sold
And then the
calls.
sold puts squeeze upwards. And that's kind of like what happened all the way from 4,100 to here.
Yeah.
But it's definitely apparent that, as those sold puts, got devastated and, closed in the money or are closing in the money, it doesn't look like they're being replaced. So while the leverage for puts continues to go up, the leverage for calls continues to go down, which means people are they're more reticent to take on, more out of the money risk on calls. And without those out of the money, farther out of the money calls, there's nothing to chew through to go upwards. So that's why I've been saying for a while, chop until down. I
Core
thought
says
down was like,
sold calls, you mean? Yeah, he does. Sold calls.
yeah, sold calls.
You said sold, you said sold puts.
So I kind of thought we already would have gone down, but yeah, they're holding it together. I mean, there was a big push. There was a big push after December OPEX, I think probably to prop up the changes from that to kind of keep it going, but then that's dropped off again. So, I'm kind of
Yeah,
looking
I noticed
for.
the charm breakdown on this expiration was enormous, given it was just a weekly, right? I mean, I guess it's end
Yeah,
of
I
month, but
think it's an end of year kind of thing, right?
yeah,
I think there is a chance that, whoever found themselves in the position they were in at December OPEX were like, I want to finish out the year up here. So I'm going to just do what it takes to finish it out, close my year, and then turn over a new leaf next year. So what are people going to do? I have no idea. I mean, people could come rushing in and sell more, but you think about, like, I don't know. People have talked about that everybody reinvests, which then just increases leverage. But to me, it just seems like at least the derivatives market. I mean, it's a zero sum game. One person wins, another person loses. What matters is the total amount of money in that market, and that didn't change from last year to this year. In fact, it went down.
yeah. Well, I mean,
From
if you look at like flows, I try to post them when I come across them, but like, I mean, money market funds are still experiencing tons of deposits. We're still seeing like money flow away from equities, right? Like, obviously bonds have seen shitloads
Yeah,
of inflows recently.
yeah, I agree. I
Um,
agree. It's kind of the thing of, like, everything can't go up at once, right? Because there's only a finite amount of money. Now, with that being said, it has been. I mean, one caveat is the last couple months, M2 and bank credit have turned up again.
yeah,
So money is now expanding again.
but
Slowly, but
a lot of people are pointing towards like the BTFD or BT, what is it, bank
yeah, buy
term
the fucking
BTFP.
paper.
funding,
BTFP.
BTP, yes, the BTFP as a source of that increased credit as they arbitrage that like point 0.5 basis against the overnight repo.
Yeah,
So
maybe.
something interesting. SOFR Friday jumped to 4.5, 5.4.
What?
Yep. Yeah, SOFR jumped to 5.4 in after hours, and then also like look at Ultra.
Yeah, I
Uh,
mean, there's a lot of stuff. I've seen some chatter on this. I'm certainly not an expert, but what I've read that sounds plausible is at the end of the year, the banks all are trying to, lock down their books and get everything settled. So there's it's a very illiquid market for that day, and so you'll see a lot of that stuff. So, like, another example is the on RRP spiked like $300 billion, and it did the same thing last year at the end of the year apparently, and it'll just come back. So, I mean, that spike, I mean, it'll be interesting if it persists, but it'll probably just reverse tomorrow.
it's I mean it's kind of what I'm thinking is that like as confidence and fewer rate increases, well, as the market starts to price in fewer rate increases and we approach the Fed meeting, which they should tone it down a little bit as we approach the Fed meeting, I think we're going to see conditions tighten a little. This was the other notable thing was UB, the Ultra U.S. Treasury bond futures. These went down fucking really hard yet Friday into close. Like
Yeah, I mean,
really hard,
yeah.
like was it 70 basis points in 10 minutes. And I know the top end of the yield curve obviously spiked there. But I think as the threat of the carry trade closing eases, they're gonna lean back into it because they need something to lend against. And if you look like from Thursday into Friday, we're starting to see the carry trade turn around a bit. It's not a lot yet, right? It's like 22%. I guess at its peak it was about 22%. Now it's about 12. But I think we're gonna start to see that turn around, and we're gonna start to see more of that like dollar dollar yield vol correlation pick back up that we saw from like August through October. Because if this isn't going to collapse, they need to lend against it, right? And if it's imminently going to collapse, they need to close it.
I mean, if you look at the corporate bond market, right, like the effective yields of triple B, triple A, and high yield, those spreads have been dropping really fast, right? Like we are back to 2022 levels, lows of 2022, like pre most of the rate hikes for like triple A, triple B spread and high yield to a decent degree. And I think what's happening now is, especially since we're rolling into the big, wave of corporate maturities, uh, and also, CMBS maturities, that kind of stuff. I think we're seeing the market try to sort of set the stage for a roll and all that credit, right? Whatever's gonna roll, they want to roll it not necessarily at the maximum yield because they don't want to screw over their counterparty, but they want to do it at a you know a doable yield for everybody. And I think that's sort of what we've been seeing happen with these financial conditions easing like crazy. More so than anything else is the debt market trying to stabilize itself before a destabilizing event.
Possibly, yeah. I mean, I think there's two outcomes largely. We either see a continuation for 2024. I think we either see a continuation of the bull steepener, which is more likely. But this also means that we're going to probably see, rate cuts, right? Hold on. All right, we're going to see rate cuts, and we're going to see the carry trade collapse, right? So carry collapses, and then, that's going to lead to asset class devaluation. Probably broadly in MBS, CMBS, most likely. But maybe equities also, since they're they're such a big proponent right now.
Well, I mean, equities are a leveraged component of the MBS and CMBS, so
Yeah.
naturally they should follow suit eventually. Yeah.
So I think we see this in the early stages of it, like first half 2024. If we see the yield curve uninvert, then second half of 2024, I think we see margin compression come off of this and reduced guidance, which would give us a really low close on the year for SPX. I would say like 42 to 38 if we go through with the bull steep, like if the bull steepener continues, right, and we see that yield curve on inversion. And then I think like the other route is that we see the yield curve move back up, right? Like what would actually be termed like the hard landing, but I think it's not as bad, right? Like I think if we get the hard landing, we get the tighter financial conditions. We don't get rate cuts, right? Or if we do, we don't see them till the like end of year 24, right?
Yeah.
And I think this forces the treasury to issue duration.
I mean, are you getting the order backwards a little bit here? I mean,
Well, yeah. So
what's
probably
gonna cause the rates to go up without more supply?
Well, so I think he's got it right. So the bull steepener, right, is pretty much, short-term liquidity becomes king, right? And you see.
Well, I always forget which one's a bull, but the bull steepener is the front end comes down.
Yeah.
Yeah.
Yeah. The yield curve uninverts.
So rate cuts they're gonna cut.
It was essentially, well, the market's cutting rates for the Fed at that point, right? Because it's
yeah,
an
but the
increased demand
Fed,
for
the
short-term.
FFR pins it at 5.5. You're saying like the middle range comes down?
The FFR pins the 3 and 6 month at 5.5.
You're saying like 1 to 7?
I mean, it depends on how much demand for short-term liquidity picks up, but this could drop it below the federal funds rate. Like the bond
Yeah.
market can drive those yields, right?
If the 3 and 6 month drop below the federal funds rate too, that's going to either cause the Fed to have to take either open market action or cut rates, right? Because
I
that's their
mean, that
target
would be
rate.
pretty extreme though, because
It
I don't
usually
know,
is.
why would you buy a 3 month at 4% if I can deposit it overnight at the Fed for 5.5?
This is why I think that the hard landing is more likely. But it can happen if everyone's seeking short-term liquidity at the same time.
Yeah, I mean, if 3 months at 4 sound, but that's kind of a hard
Well,
landing
the
too,
Fed, the
isn't
Fed
it?
funds rate,
It
the Fed
is.
funds rate is
Yeah.
the target range. The thing is, the overnight operations are still determined by the open market. If people are piling into overnight, then the yield on it's going to tank. Like that is still determined by the open market. But the Fed,
I don't think that's true.
it is. If the Fed, in order to keep it in the target range, they may take open market actions if the market itself is starting to like fall out of the range.
Yeah, we have like the
You're saying the
SOFR rate,
overnight
right?
rate, but if
Yeah, so would drop
the
too.
Fed is offering a fixed rate.
The Fed's rate fluctuates based on the pricing of Fed fund futures.
Yeah,
Um,
it's a target range, but it is basically like saying like SOFR is going to drop, right? If SOFR dropped to 4 or 5, then the overnight repo rate's going to drop around the same level, right? And
yeah,
the
I don't
Fed,
understand. Yeah, I'm not familiar with all the mechanics. That's interesting.
yeah, so if it
Yeah.
drops below the target rate, the Fed either has to dump positions, right, to push the rate back up, or they just cut rates. But if people are piling into overnight positions like that, and they need that short-term liquidity, and there's no interest in the longer end of the yield curve anymore, that's a sign of liquidity issues in the monetary system, and that's super bad. So the Fed's probably going to want to start thinking about QE in that point, which is why the bull steepener is definitely not the good case for. It's good for
Yeah,
bondholders.
it seems like chaos because I mean that tells you that there's not even any demand for the small amount of duration that exists. I mean, that would
Yeah,
be
exactly. It's super duper bad because that means no one has the money or the risk appetite for it versus, a bear steepener, right, which is bearish for bondholders overall, but ultimately that's the bumpy landing, right, versus the hard landing that a bull steepener would sort of indicate, right? But the bull steepener, is also like the inflationary sort of outcome, right? That's where we have to repeat 2020 and 2008 again with our response versus the bear steepener, which is I think JPow's goal, which we could just sort of slowly back off from as it uninverts, right? And we'll probably still run into issues, but they'll be slow and like a grindy sort of problems that can be resolved over time versus the
yeah,
bear
but
steeper
what
that can
so
definitely shock.
what would cause people to want to take less risk? What's going to be the thing? You think it's the CMBS refinancing or
Usually it is collateral, like so some sort of like big piece of leveraged collateral like CMBS or MBS, carry trade, that kind of shit. Like so like if Japan decided to peg to the dollar like overnight, then that alone would cause like a gigantic collateral
okay.
haircut.
Yeah,
Oh,
it's still going to take it's not just going to happen all on its own. It's still an
no,
event driven. Yeah.
it happens when there's bouts of volatility, right? So you think about the pyramid of leverage, right? And the base of the pyramid is dollar collateral, right? So that's treasuries, MBS, those kinds of things. So when those rapidly change in value, the entire rest of the pyramid changes in structure, right? It has to, otherwise it's
Yeah.
going to topple over. And that's sort of how you get into these liquidity events, and why people all of a sudden want short-term overnight liquidity is because they need to be using it constantly to restructure their asset allocations. And when the money's not freely available enough, then you can't restructure fast enough to hedge your positions and stay in good standing. And that's when you get into places like margin calls, just because you can't get the money fast enough.
So yeah, so back to what I was saying. So for the hard landing, tighter conditions, Treasury starts to issue duration, carry trade persists, QT continues, velocities, and this I added these. So this is the money velocity soft landing, right? And then we get a slow contraction in growth and credit, and the BTFP closes right in March. And I think the hard landing scenario is actually more bullish into the end of the year. Like I think both of these could see, we could see a significant correction, right? Like maybe 20% here, but I think like 50% on the soft landing. Because the immediacy of like the BTFP stays open, right? And the carry trade collapses. This is gonna be really rapid, right? Like if the Fed starts just cutting rates, the BTFP closes, that back end liquidity is gone, and then the carry trade is also gone. The banks are fucked, and we get like SVB 2.0.
So I mean, but the Fed has to be aware of this. So
I
why
think
would
I
they
think
do
they
that?
are, and I think a lot of the promise of cuts is rhetoric, right? I think they're trying to use their rhetoric, their only other real tool, to push people into those tighter financial conditions and kind of soak up that extra liquidity that's smashing all around the system, right? And then so far they've done a good job, right? They've got the treasury shorts pushed out by and large. We're starting to see people actually buying into the long-term treasuries. We're seeing banks roll over at, obviously not a great rate, but slightly better, in a more liquid environment because the shorts are covering, um, which, prevents a crash where if yields were super high, the environment would be very illiquid, right? And it'd be really hard for them to roll their underwater maturities, right? But in an environment like this, even though the yield's not as great, there's far more liquidity, right? And I think we're seeing that in the auctions with the tails tightening a little bit, not a lot, but we're seeing it tighten a little, right? In the 2 to 7 year range, it's a little bit better. Actually, the 10 auction wasn't that bad either. But I think like the soft landing that bulls want comes with a significant crash, because I think all of that will have to, like the asset class devaluation, the margin compression, the downturn in M2 velocity, and the BTFP staying open means that everything's going to get pushed into short-term collateral, right? Everyone's going to dive into the 3, 6, 1 year, 2 year. And that's going to drive the front end of the curve down really, really rapidly. And then, obviously that's going to create a lot of volatility. But I think the hard landing scenario where we don't get cuts and credit tightens, I think that actually protects the downside in indexes a lot more. Like I think we can get a correction off of it still, but it'll be a lot softer. It can happen over time. It allows banks more time in the carry trade in order to boost interest, right? The only caveat to this is, oil prices need to stay moderately low, right? And in this situation, like the soft landing situation, dollar drops really hard, right? We're gonna see sub 100 Dixie, maybe like sub 90, right? Which means oil's gonna go up, and we're gonna reignite inflation. But I think if we don't go this route, we keep dollar value high, yields persistently high, we can keep a moderate rate of reinflation without seeing that big secondary tail spike. So I think Powell's actually aiming for the second outcome. I think he's going to close the BTFP, but I think he's going to keep rates the same or roughly the same until the end of the year. Maybe a cut or two before elections or something, presuming he's influenced that way. But roughly the federal funds rate still above 5 into the end of 2024. And I think if he does that, now that he's sopped up all that liquidity, right, now that everyone closed their treasury shorts and went long duration, which, you know, Yellen wasn't doing, but Powell actually got them to do. When financial conditions tighten again, they'll really tighten, right? So they tried to tighten in March, right? We saw financial conditions tighten in 2022. We saw them try to tighten again in March. BTFP blew that up, right? They leaned into the carry trade as hard as they could. They got as much collateral as they feasibly could. They pumped the fuck out of equities. They went short treasuries, right? But now, you know, now that they've closed those shorts, they've bought those long duration treasuries. Now, when financial conditions tighten, they can actually contract. You know, maybe there's still a little too much velocity in the system. We might get like another round of this fucking loosening tightening cycle. But I think into the second half of 2024, we'd get some serious tightening if that was the case. So, like, say we tighten from now until like March, right? Like, financial conditions just tighten going into BTFP. Banks protect their leverage and they protect their Basel III condition deposits. Find out BTFP going to be open or closed. If BTFP is closed, then they're going to have to lean into the carry trade, right? And they're going to have to post those bigger Basel III or Basel IV requirements, right? And that gives you those really super tight financial conditions into the second half of the year. If BTFP stays open, then they're going to have to dive headfirst into short-term leverage, right?
Yeah, I tend to also lean towards the hard landing scenario.
Well, I think it's the best way of defeating the fiscal impulse, if it can be defeated.
It's difficult, right? I mean, you talk a little bit about velocity, and I think that's where a lot of this fiscal impulse is still we're feeling most of that effect right now in velocity, right? Because I mean, it's just a round trip, right? The government, pays for its services rendered using the QRA. So it goes from the QRA to a bank, and then the QRA issues a bond, and it goes right back from the bank to the QRA, back to the bank, right? It's just this big circle. And so in that scenario, I would think that Treasury supply would devalue the bonds over time, and rates would go up. But in the short term, you've got that money moving more frequently, more money moving more quickly because of the acceleration of government spending.
Well, it's not just that, right? It's like we're influencing a lot of velocity on our side, but there's a lot of velocity coming off of the carry trade as well, right? Because think about the issuance on our side and the uptick in velocity as we're rotating funds through like on RRP and then back into the open market, right? And then also think that those treasuries that are being purchased, right, are probably then going on to be lent internationally, right, or held internationally as asset-backed collateral with foreign banks, right? Yep. And then that's probably rotating out into other markets. And then, probably leveraged up into more collateral, honestly, which is, I think, why we're seeing double the leverage that we should be seeing on equities, is because, they're leveraging up their leveraged collateral through Japan, right? Or anybody. It doesn't have to be Japan. It could actually be anybody with a lower rate. Right, but it's largely Japan, right? Like the uptick in financial transactions in Japan is like 12x over the prior year, right? But then that money is probably getting leveraged up back into treasuries and then back to Japan again before then being deployed more broadly in like US markets and in lending infrastructure, right? So um the cyclical reallocation of those assets is driving a shitload of the velocity. And so I think the hard landing scenario allows that velocity to slowly grind down over time. But I think if they close, like if the BTFP stays open and everyone needs to go into short, like the carry trade's going to collapse, then that velocity is going to just hard stop, and it's going to create a credit event.
Yeah, but I guess one thing with your hard landing scenario is I could see the BTFP remaining open for another year. I kind of expect that.
Interesting. Okay. And get the hard landing.
Well, I don't. Yeah, I guess I don't know. Maybe I'm.
Can they when
Maybe
they're
I'm
arbing?
somewhere in between hard and soft in that case.
Like, I mean, they either need to cut. Well, if they're gonna leave the BTFP open, they have to cut rates, right? But they have to kill the arbitrage in the trade. Otherwise, the Fed's losing the premium on the program versus gaining the premium. So right now they're losing premium from SOFR to, or from the overnight rate to BTFP, right?
Yeah, well, we'll see how much that picks up.
It's
If it
picked up quite a. I mean,
continues
it's like
to.
200, 300 billion right now, right?
No, no,
150.
no.
How much is it?
It's like 130. It went from like 110 to 130 so far. It's like $20 billion.
Oh, okay.
So yeah, I mean, if that starts to get worse, I mean, right now it seems like, I mean, it makes the Fed look stupid, but it's not a really big effect yet. Um, and I think the risk on the other end of causing a credit event, which is what they opened it for in the first place, to me it seems unlikely that they would close it. And if anything, if they want to prevent a credit crisis, well, bonds are going back down, because I think bonds are going to go back down in the first quarter.
We continue down in the first quarter.
Bond values
Oh,
down,
okay.
yield
Okay.
up.
Yeah.
I think yields are just basically going to start going straight up from here till something happens. Banks sitting on mark to market, or not marking to market, are gonna need this PTFP even more. But yeah, I think everything else in that scenario is kind of what I'm expecting. I don't think the Fed's gonna have enough to cut, at least for a while. I do think this is a little harebrained, but I do think that the federal government is accelerating its spending, and that acceleration will put pressure on inflation.
So they're accelerating issuance. This is something that this is the only problem I have with the brick and battle. Um, is that they're accelerating issuance, but government spending is down over the last quarter. So they're spending more on inflation, like they're spending more on paying off their
That might
net
be
interest.
seasonal.
It could be, yeah. But right now, at least the trend is that they're spending more on net interest and less on actual government spending, right? So
Yeah, I'd have to double check that. I'm pretty sure that it's still accelerating. I know it was accelerating last quarter. This quarter, if you look at like the unadjusted, because they post it quarterly, and it's got very seasonal effects, and I don't know if that's just because of structurally when they tend to spend various buckets of money, or if that's actually a real decrease, based on
I
some
know the
decisions.
military spending's padded seasonally. A lot of that comes out all at once, but then payroll's constant, right?
Yeah, so I think their spending's still up.
But is it going to, I mean, like, so they're going to have to, I mean, if they're going to maintain the rate of spending that we saw in 2023 into this year, they're going to have to issue like twice as much as what's currently projected.
Yeah, yeah. That's why I think rates are just going to go straight up.
Yeah, I mean, so yeah, and by the way, the
That's something else we
targets.
also have to talk about that we haven't discussed at all. That's coming up soon, isn't it? What, end of Jan, middle of Feb, where
We start the new fiscal year.
no, we have more fights over something, right?
We have
I
the
don't.
Congress
They
shutting
raised,
down again.
yeah. They raised the
Oh, they
debt
haven't fixed
ceiling
that.
through, but they basically removed the debt ceiling until what is it, like 2025 or something crazy like that. It's after the election, right? That was the key, was to move that out past the election. But they still have to fund the government, right? So they still have to pass the appropriations. And the last time they passed the appropriations were, I don't know, it feels like forever ago, but it was like a few weeks ago. When they were trying to find a new speaker and all that nonsense. But they only funded it. They funded it through two bills, and one expires sometime in January, one sometime in Feb. So we have that to look out for. I mean, then you'll have a situation where Yellen will have to, if things start to grind to a halt, Yellen will have to just start, drawing down the TGA, which that's an interesting thing I hadn't really thought a whole lot about. That could be pretty stimulative in the short term.
Could be.
So maybe rates don't go straight up. Maybe they go flat for a little bit and then down again as the TGA drains, and then once they pass the appropriation and she starts selling bill bonds, they rocket. But at the same time, we're going to be running out of the RRP, right? Sometime around March as well.
Well, that depends if RRP starts refilling because yields are moving up. Right, I think right now. Oh, happy New Year, Girk and Pickle Jar! Can't wait to hear all the juicy DDU nerds. I mean, quants have for us this year. Thanks, Costello. Right now, I think we see a slight uptick in yields into the into the FOMC meeting, right? Just as a risk precaution, because right now there's no risk precautions in place, right? So I think an uptick in vol and an uptick in yields is reasonable going into FOMC because, the market's still pricing in like 6 to 7 cuts. The FOMC was projecting like 3. A middle ground needs to be established on this. So I think we see a slight uptick in yields and vol into FOMC, and then coming out of that, I mean that'll depend on what Powell says, right? If Powell's like we're not cutting rates in the first half at all, then we're gonna see yields climb even more, right? We're gonna see on RRP fill right back up, and probably that money is gonna come out of equities, not bonds, right?
You'd think.
Or both.
Well, yeah.
It'll probably come out of both.
Yeah.
And
it's
so
kind of I think they're much more strongly linked than a lot of people think. I mean, I think there's a reason that we've entered a period of very high positive correlation between bond values and equity values because one is being leveraged to push the other.
Yeah, I mean they always are, right? Like we've talked about this on like even like ports and our size, and like I know a lot of people in the pickle jar aren't really experienced enough to do this, but you can buy the 2-year right at 5.5. And then you get like 90% margin, and you can take that margin and you can use it to like buy TLT, right? And then you can take your TLT and you can sell covered calls on your TLT, or you can take your margin and sell CSPs on TLT, or you can open strangles on TLT, right? And then if you buy the underlying, then you're also getting the dividend yield from TLT. So on 90% of your total capital, you're receiving another, what is it, 4%? What's TLT at right now?
The dividend yield's right around 4, I believe.
Yeah, 3.33. So you're getting your 2-year rate at like 4.25. You're getting 3.33 on your TLT holdings, and then you're getting your like 30-day yield on your covered calls, right? Which is maybe like another, let's say like 4%, right? And that's
Or like
monthly, right?
100 basis points.
Yeah, and so like I mean this is like really common. The fact that like I don't I find it odd that like Twitter's like mind is blown by the idea that people are taking treasury collateral and selling calls against it. Um, but I also think like vol funds and so I tweeted about this last week, kind of as like a dig against all these like fake volatility funds. But like we've seen an increase in assets under management and sell side ETFs, like sell side yield ETFs, right? So they're either selling CCs or CSPs, or they're selling a leverage product that mimics this. Those have gone from 10 billion in AUM to 60 billion in AUM over the last 2 years. And why? Well, the reason why is because they offer obscene yields, right? I mean, you can make way more money selling your own calls, but a lot of these funds are offering, like 10% to 13% on a monthly yield. And that's very attractive to especially income investors. So anybody who's retired, or people who are they're targeting their Roths at these, any tax deferred account where you're not paying on the income, right? They're just dripping them like JEPI and QYLD and the Yield Max ETFs, all of these, right? And they keep just growing, and there's more and more and more products. And what this is doing is it's taking like a big weighted blanket and throwing it over the market like it's an autistic child, um, and smothering volatility, right? And all of these funds who make their money on vol alpha, this is fucking them. It's fucking them really, really, really hard, because it keeps vol suppressed, which encourages dispersion trading, right? It encourages everyone to go long the underlying, or long vol on the underlying, short vol on the index, and yeah. So I was pissed that not one of them responded to that, but I guess it was too low of a blow.
Yeah. Yeah, no, I mean I think it is telling if you listen long enough to some of their discussion, they don't really give away a lot. There's a lot of vague statements we've discussed before, but every once in a while you get a little nugget of like, oh, okay, he's selling puts.
I mean, what other choice do they have, right? Like their funds are built on like mean reversion and volatility, right? So vol up, they short it; vol down, they go long over and over and over again, and over time this yields alpha. But when vol's just this, you got to change things up, right? Vol's just fucking not going anywhere, because everyone's selling. You got to get on board, right? You can't beat them, join them. Otherwise, you're just playing tail events. Like your entire fund becomes about trying to play tail events and staying liquid, or macro events, right? And that's fucking awful for a vol fund.
Yeah, you become Michael Burry.
Yeah. Then you're Burry. And Burry can do that, right? He can sit on his shitty position for 10 years and people always give him money because he's fucking Michael Burry. But these guys with like little like $5 million pod funds, like they're not gonna get the backing to fucking play tail events 10 years in the future.
Yeah, I mean, this is why I think that we're kind of near the top in the equity market right now, and it's going to come down. I was telling this to Dork earlier, and I know I overused the term Keynesian beauty contest, but
you do.
Everybody that's short vol is expecting it all to come apart at January OPEX, right? Which means that they're going to start front running.
Yeah.
I expected it to already start coming down because of this effect, and obviously it hasn't. But we've clearly, there are clearly signs that it's reaching its apex, right? I mean, these just dramatic drops that are,
We're seeing well,
they have
we're
to,
seeing realized vol tick up, right? Which I think is the
yeah,
biggest indicator,
and it's
and
consistent
it's
with the
pushing volatility on the longer end of the convexity up higher.
yeah, I mean, and that's consistent with the fact that there's just less of a steady supply of sold options going forward, right? I mean,
Well, who the fuck wants to
most
sell them? I
well,
mean, honestly, they're
mostly, I mean,
worthless.
everyone and their mother's selling puts, right?
Yeah,
That hasn't stopped at all. That's just this. That seems like just this infinitely rolled position that has no care
but at
for
the beginning
anything.
of November, when you were selling puts, you were getting like
Right.
7%, right? Now you're getting 1%, and so now it's like, well, fuck. If I want to maintain my target rate, um, I've gotta like sell calls too, right? But then you sell calls, and you can bump up your total yields, but not much because calls are cheap too. And then like so you're getting like another 3% here, but
But that's the thing.
you're still losing out there.
So far since the beginning of the year, this problem has been met with increased leverage, right? Whoever's selling puts
Just sells
has
more.
shown
Yeah.
an infinite propensity to basically just sell stuff farther OTM with larger quantities with more leverage because it's never going to fall apart, right? And then they just stop it from falling anytime. They just keep selling into it. So that position seems uh, immutable and will persist. The question is how do we go higher if the people selling calls all got destroyed in the last few months and number one lost a bunch of money, right? Gave it all to the market makers. And number two, so they have less to deploy in the future. And number two, why would you continue a trade that's not working in size, right? You're going to want to scale it out. And we're seeing that happen at the call side. The leverage is being scaled out, while on the put side, the leverage remains elevated, if not growing. And so I think the overall effect of that is just going to be more of what we've been seeing, right? You just get this like drollish, droning push up that's just obnoxious, that just kind of falls apart on the intraday, and then they try to catch it, and that's just going to keep happening until either they don't catch it or they sell so many puts that they flip the market maker uh, long gamma, and it just falls apart.
I mean, these last few weeks have been some of the most fun I've ever had trading like our data. Um like watching the MMs go, or watching bulls go so short puts that they drive the like long negative gamma, and those breakdowns, and then also like where the market maker is trying to price out uh long vol. Have you seen that in the last couple of days?
Yeah, it
Uh,
happened on Friday. Actually,
Friday was nuts. So Friday at close, I sold a bunch of butterflies because in the last like 10 minutes of the day, because the out of the money contract on both sides of spot was like $2.50. At
oh,
10
that's
minutes to
crazy.
close. So the market
Out of the money,
maker
out of the money on both sides.
on both sides. Yeah, the puts and the calls. They were like 40% IV.
That's crazy.
It was fucking
That's
nuts.
awesome.
Yeah. So I just sold like a shitload of butterflies into close, and the market didn't move at all. Because no one wants to go long anything, right? Who the fuck's gonna buy a 250 call 10 minutes into close that's $3 away from spot?
Yeah, I think obviously there was a lot of, everybody was focusing on the roll of whatever JP Morgan collar was being rolled.
Yeah, so that rolled in
yeah,
the early part of the day, which was unusual. But
yeah,
they managed to, and part of the reason why I think the market wasn't going to move was I think JPM bought up a bunch of the, I think they bought up a bunch of the 0 DTE spot strikes, and that's what jumped the vol, right? And so by doing that, they pinned it so they didn't have to re-roll. So if you look at where like the times, hold on, I can kind of pull it up here on the 5 minute if we look. This is like where they rolled like the short call leg, and then they rolled into the put spread here, like here and here, right? And then I think they bought like a bunch of the 0 DT in the money calls at like 60, 65. And that spiked up the pricing on the call side. And spiked up the vol. I think they bought some like in the money puts also at like 70, 75. And I think they just like they spiked the vol on both sides of the strangle and then just left it.
just to try to keep slippage low.
Yeah, and then yeah, we closed right there, right where they rolled, and they didn't need to roll again, right? So it's the perfect setup for them. But I will say we've now got the put side of the JPM collar really fucking close to the money, and I understand that's offset by the sold put, but the sold put's really far away. The sold put's down at like 3,800, right? So we got this big pile of call selling to the upside of us, and we got a 40,000 90 DTE puts that just opened at 45.10. That's pretty fucking spicy.
Yeah, I mean, I think definitely as they roll, obviously it's going to put more downside pressure on equities and upside on vol.
Yeah.
But I just think in general, I mean, most of that, I mean, by the time they're rolling, I mean, the call is so far in the money, they're hedging that away. There's no way they took that naked call
yeah,
all the way up
but now they're
like
gonna dump. They're gonna dump all those
but,
future contracts that they've been holding.
No. But think about it. When both you and the MM are hedging in opposite directions, and you both have that position closed, it just kind of annihilates itself, right? You might expect some fluctuations, but you're not going to see like a large directional move from that. I don't think you ever will, because both sides are hedging in a similar way, and so it just self annihilates at the end.
But now they're not hedging. So this is where it shifts, right?
The net difference is that now you have puts that have more. You have puts with more delta than they did before, right? Which puts pressure downwards. It's really the puts, I think, that matter.
Yeah, I don't think the sold calls matter that much. Well,
a little bit.
Sold calls are going to compress vol to the upside, right?
Yeah, they're also going to stabilize.
They're going to compress gamma. They're going to compress gamma to the upside. So they kind of act as a stabilizer on upside moves, or at least on big volatile breakouts to the upside. But yeah, I think the puts coming in, and also the fact that now they no longer have to hedge the sold calls. So all the futures contracts that they picked up to hedge the 45.15 calls that got driven into the money, they're going to close those now. If they haven't already started closing them, that may be what we saw last week, was some of that position being shed. Like kind of right when we had that big like 1% drop. But yeah, I think we could see more futures selling broadly, especially if they start to dump the rest of whatever hedge remains, right? Also, the MM's going to dump their hedge.
Yeah, that's the thing, is the MM is short. To some degree, they're short futures, but if their position is in the money, right, they're not going to hedge away profit. So you could ostensibly propose that the that JP Morgan is more long in unnecessary futures hedge than the MM is short, and so the net effect will be selling futures. But the extent to which that happens, I don't know.
Well, the last time we saw the collar roll up was June, end of June. The immediate effect was some downside. Then we rocketed upwards, I think, into the collar or close to it, tested it at the time. I don't remember. I have to go back and look at where the collar was in June, but I think we came like halfway to the sold calls and then dumped. But this immediate effect may be more relevant. I don't think we're gonna have another like 5% upside move, but
Yeah, that was a different time. I mean, that was a point where we were still levering up. We're above.
yeah,
We're already above the leverage at the peak of that, right? So, I mean, to continue to drive it upwards and think that this is a similar situation, I mean, they would have to take on so much more. I'm not saying it can't happen. I'll just be very surprised. I mean, it'll be interesting to see how high this leverage goes because it's, you know, the higher it goes, the
well, what's interesting is the smaller collar in July rolled, right? Also up, right? So we had the big collar rolled up here. We saw a little bit of a pullback over the next week, and then that recovered, right? And then the smaller collar rolled up right around, where is it? July 30th, 31st. So right here. And then, you know, that's when we started to really dump. So I don't know if that has a big effect, but it's interesting that there's a correlation there with where the colors roll and downside.
Yeah, I mean, it's definitely part of that like fuel upward, right? The,
Yeah.
you know, chewing through all the sold calls, and then once the sold calls, you know, pull away.
Also, once JPM like lands that collar, everybody and their mother starts selling calls above it, right? Using it as like their
Yeah,
risk
which is something
off.
I hope we don't see too much of because that will provide more fuel for upside. So
Well,
I'm kind of
provided
looking out for
we
that.
can
But
bridge the gap to 45.15. That's still a long way off, right? People are already selling calls above Gamma Max, right? We're seeing Gamma Max on SPX and SPXW pull away from price pretty rapidly. That's usually a pretty
yeah,
bearish sign.
yeah, no, I agree.
All right, let's. Do we want to wrap this up? Did you have
Sure.
anything to add, Torque? You've been very quiet and hungover today.
Well, you guys, your guys' discussion has been captivating. That's why you guys. It's just been very entertaining to listen to. I mean, I don't disagree with a lot of it. It seems like this market has just been propped up with compounding of tail risk, and if the market itself refuses to acknowledge this risk, right? Like, you know, you would expect somebody well capitalized enough to sort of make money on this would have done so by now, but the fact that they haven't sort of points to that this is just like Jay Fresh alluded to, the Keynesian beauty contest with vol. Everyone just kind of agrees it's going to stay flat. So that also means that they're all looking around at each other, wondering, you know,
Who's gonna be the
who's
first to
going to
go
get out.
short? Yeah.
But yeah, no, I just you guys said it in much better words than I could have. I would have just kept it in generalities like that because you know, it's very complex, right? When you break it down into the Greeks and how the market's makers hedging and all that stuff, but like really, ultimately, it just comes down to the fact that we've got an overcrowded short put trade that has been pushing the market up, making sentiment turn bullish, and you know, you can think of reasons why that's happening, but ultimately that doesn't matter. What really matters is that they either will continue to do it or they won't. And if they don't, there's just nothing to actually fundamentally keep the market here unless these banks found a whole bunch of money under the couch and they're going to use it to buy up stocks on the drop. So we'll see.
Yeah, I kind of agree with that. I did I over the weekend a little bit. I was dabbling with some of the data downloads you guys gave me, and I was looking back at some of the OI data on SPX. I thought it was really interesting, but the only point at which we see a significant amount of call buying was on the entire run up, right? Like all the way from like the bottom of October. Like bulls brag a lot, but none of them bought any calls till we got to like right here at like the like near the Fed meeting. Like this is FOMC. So this was all just like puts closing, like long puts, right? You just see put OI falling off the chain like crazy. Um and then you don't really see any like out of the money call OI until like FOMC a little bit, and then here, like this period from like December 7th through December 20th. There's a lot of out of the money call buying. And then that's it. And then that died with the big drop, and then we just haven't seen any more come in at all. So what kind of worries me about the downside presumptions is that if we see another actual round of call buying, I feel like that's gonna be a big problem. Like if we see Delta come in, right? And this is really the only point at which we see any actual Delta come in. The rest of this is all short squeezing, right? So these 2 points. If we see Delta come in, then I do think we have a chance to drive up to like that like 4850 4900 range. I don't know why they would buy it or how they would get the money to buy it, but
It could happen, yeah.
I do want to post that as like I don't know. How do you feel about that, Jay Fresh?
I'll have to dig a little deeper into the data and a little bit more granularly, but I mean, I generally agree with the idea that bulls caught a lot less of this upside than they're letting on. And in many cases, a lot of bulls got caught offsides because they, with covered calls on their underlying positions.
Yeah.
Yeah, it becomes an issue of, do the bulls who missed a lot of this want to buy the top, right?
Yeah,
And
that's actually
that
something
really
I
is
was
what it
wondering
comes
about
down
here
to.
between December 13th and 20th. I'm wondering if the like the aggregate bump in long delta is simply because short calls went in the money
Yeah.
versus long calls being bought.
Okay, yeah. So a lot of the delta on the way up for the calls is just because they went into money. If you look at,
Okay.
so gotta open somewhere here. If you look at,
So did bulls make any money on this?
there were calls bought. They were bought from. What were the dates that you put on here? December.
November 13th. November 13th.
Yeah,
And
it's
then,
more like December-ish
yeah,
to
December 13th to the 20th.
yeah, so from December 13th to December 14th. Well, yeah, let's keep going to about December 20. So from December 4th to December 20, there's a substantial amount of calls bought, but now there's no. I mean, since that point, there's been like nothing.
Yeah. So okay, so I think that's where bulls made their money, but I'm actually not entirely sure that what we're perceiving as calls bought isn't just short calls being bought to close.
Well, you see the OI drop, so I'm looking at OI.
Oh, okay.
And I'm seeing,
Well,
so you actually see there's actually not really much.
Yeah, because it's kind of like
up until that point. That's why I said December 4th to December 20th, because that's when they meaningfully increased. But puts increased even more at that time. So it's really more of a sold put game still, I believe. And this is the other thing that I've been looking at is the leverage. The leverage taken on these calls is going down, which means that people are reticent to extend themselves farther out of the money from where we are, right? Which shows that people are getting a little antsy with the levels. I mean, sure, we could continue to go up. There could be another pocket of short call somewhere, and they sell enough puts, to just in a really liquid environment that they get this thing to squeeze, 4,800, and we go up to 4,850. I think 4,900 is is a pretty big stretch. Although momentum traders might pop back in. I don't know. I mean, yeah, I could keep going up, but to me, it's just a matter of time before it falls down. That's what I've just been saying. It's gonna chop until it drops. Chop
Yeah.
into drop. I don't know
Well,
when
I
it's gonna
think
drop.
eventually gamma neutral is going to hit spot, right? Like it's only a matter of time.
Yeah. That I think as long as there are, that's why I mentioned that there's more puts being added than there are calls. As long as the sold puts continue to push gamma neutral up towards spot, right? Just
Yeah.
from the sheer volume, eventually the market maker is going to flip.
Yeah. I think we're
That'll be a lot of fun.
we're getting really close to that.
Yeah, we are. I think it's like, I think it's what? So I have the let's let me pull something quick. I have the unsmoothed data, which is better for like tracking.
Yeah, I've got GN at like 4,700 on the monthly chain.
Yeah, but you gotta look at weekly. So
Yeah. Weekly.
Okay, so on weekly, the unsmoothed
47.
one is 40.
Oh, sorry. Go ahead.
47.66.
Oh, so we're almost under it. That's very close to the money. This week might in fact be very bearish.
Yeah, I mean, we'll see. I mean, futures are going to open up, and we're going to watch them march up.
Just to finalize my point there, and I'm glad you're kind of in agreement with me on the dates. So that would mean that bears basically got squeezed out of the bottom or took profits, right? And then after FOMC, bulls got squeezed out. And now they're both squeezed out. Like everyone's all squeezed out and done. I don't think there's a lot left to support any of this, and it makes sense if you look at it kind of positionally, like, and at the top of September, bulls were selling calls here, right above where gamma max was at that time, right? And so bulls were selling calls in this range, and then bears were short this range. And so, this was the bear squeeze. This was, and this was the bull squeeze.
I mean, that's what I've just kind of been saying as well. Like, and a lot of those sold like up at the like 47, 4,800. I mean, those could have been sold over a year ago, right?
Yeah.
And so
the
market maker, I think, is just sitting on a bunch of long calls and says, I want to make money on those, right? And sees a perfect opportunity to hedge their way up, right? All their long calls go in the money, and now they're sitting on a bunch of long puts. So what do you think happens next?
Yeah, puts have been sold heavily all the way from here to here.
Yeah, the market makers hedged it, and so losses will be minimal. Well, I mean, there's some pretty gnarly gaps though. Market makers do not like gaps because gaps are impossible to perfectly hedge.
It's only 15% downside, right?
So you've got a market maker that they probably already came out positive with all the profit they made on those calls. But why not, right? I mean, if you can just hedge your way down, why not? See what happens.
I mean, I know back in July when we tapped Gamma Max, I sold a fuck ton of out of the money calls on SPX. And I was like, this can't physically go higher. And I sold them like 45 DT, but if I'd sold them a year out, I would have been fucked right when that bull squeeze happened.
Yeah, well, for sure. That'd be pretty crazy to do, though, right?
I mean, if you're a bank, maybe not, or someone big.
Oh, sure. Yeah.
I could see you selling leaps right? But yeah, I mean, I'm not going to take on that kind of risk. Let's see, do we have any questions? Then it's a bull market confirmed, right? I don't know about that.
Well, now that I looked at the, I mean, we closed at what 47.69,
Yep,
and
the meme is in.
Gamma neutral is 47.66.
So if we fall below
Yeah,
gamma neutral,
they're
the
gonna have
market
to-
those dip buyers go bye-bye. All the dip buyers that have driven us nuts for these last 2 months, half of them go bye-bye, and then the other half go bye-bye under 47.30. Maybe more than half, right?
Another thing,
4,700.
So the last here's another thing. So the last push, that push that we're talking about in that December timeframe,
Yeah.
that added a lot of a lot of delta to the chain. All of that delta and a little bit more fell off on Friday.
Yeah.
All of it at once. So that's another concentration risk, which means that if that was bullish delta, if they want to continue to prop this up, they've got to buy a lot very quickly here overnight.
It was like 15 billion in charm, right? Fell off. And then like 200 billion something in delta.
Yeah, 200 something billion in delta fell off, which is 2/3 of the weekly chain at least, right?
Yeah. I know DN on SPXW spiked super hard. It moved up like it was like fucking $60. And DN doesn't move a lot usually. It's usually the slow one. But yeah, it moved up like $60.
Yeah, it's like right at 4,700 right now. It's crazy.
Yeah, which means DN is right at the monthly GN, very close to the monthly GN. So if we break gamma neutral, woo boy. Yeah, this is get ugly really quick.
I was just gonna be lame and say we're just gonna chop this week, but now I might amend that.
I'm into it too. I was gonna be kind of lame too, but now, yeah. I mean, it's.
Are there any data catalysts this week? GDP now, but
Yeah, no one gives a shit about GPA now. Yeah.
I care. I think it's gonna be high.
Yeah, but like only you and the like 6 people you argue with on Twitter care, right? Like no one else cares. No one actually cares about the economy, JFresh. We have JOLTS and ISM this week, don't we? Yeah, we do. We have FOMC minutes this week. We have JOLTS. We have ISM. We should have all the non-farms on Friday.
Nothing tomorrow. Global manufacturing PMI that might do something, but seems like people don't care.
PMIs are big right now. Chicago came in really low. So something you guys are gonna see shift in the media is you're gonna see a lot of like they call them recessionistas. Everyone's going to be thinking that negative GDP growth is pointing towards a recession, and any softening in the labor market is pointing towards a recession, and it's going to get spun up hard as fuck, same way it did in 2022. So watch out for that. Also, be cautious because those people tend to be idiots.
But they do sway opinions. Right?
They do, I guess. They also sway vol
really
demand.
Price sways opinion more than anything, right?
Yeah.
Retail's definitely been part of this, and some part of this, and they're about as bullish as they can get, which makes sense because the market just ripped like it was like a 20-year event or 10-year event. So yeah, they're all bulled up, but the second it turns around, I don't know that it.
I think everyone's still a little spooked because they're throwing the majority of their money into money markets. So I think red candle, people freak out. Big enough red candle, people freak out. They go, "Oh fuck, this was fake," right? Then all of a sudden, all the like, "Oh, we're still in a bear market" narratives. I mean, dude, if you look at FinTwit over the weekend, the number of bulls that I've seen flip bearish because the year is over is unbelievable, right? Like no actual fucking reason besides the year is over. And like, live, laugh, love. They want to step into a new mindset. Um like, yeah, I mean it's I've seen so many of them be like, oh well, I think a pullback now is appropriate just because the
Yeah,
fucking year
very
is over.
appropriate.
But
Yeah.
I mean that unfortunately is a big effect on sentiment. People do new year, new me. Yeah. um so
New
that is
year,
it's
new
something,
form.
I think it's something to consider. I think there's also going to be some P&L rebalancing now that the tax harvesting is over, right? I think profits are going to get taken in the 2024 period. I actually don't think a lot of who had a really good. I didn't like any of the big bank assessments for end of year targets. Most of them are between like 4,800 and 5,200, and I can kind of see the 4,800 one, but BNP uh did their like year forward report, and they kind of agree with us. They think market ends the year like 42 to 45. They see yields going back up. They see inflation sparking again. They see the Fed continuing to remain tight despite the market's um, assessment that they won't. Right? They think the EU is going to remain tight because they have to. And the EU. Here's something else. The EU's in a fucking recession. Right? Like I don't think we can ignore the fact that China is in a full-blown financial crisis. The EU's in a recession. Japan's like a month away from one. um
I mean, all I'm hearing is just everybody's going to be just climbing over each other to get that Copilot add-on to their Microsoft Office product that
yeah, right?
hasn't meaningfully changed in 20 years, but somehow costs 1,000 times more.
Dude, it'll propagate your Excel files for you like an API, but you don't have to be smart enough to build an API. And it'll also propagate them with tons of incorrect data that you can then spend the next the 18 hours you would have spent propagating that Excel sheet, though you can now spend fixing all the errors from the sheet that Chat GPT propagated for you. So
it'll take even longer because your boss fired the 3 people that helped you with it before.
Oh Jesus! Did you see the amount of layoffs going into the beginning of this year is kind of frightening. I definitely think we start to see our spikes in unemployment come Q2, Q3. Maybe maybe sooner. I know Google just cut like 30,000 jobs. Banks are cutting jobs like crazy. JPM cut like 60,000 positions, right?
Yeah,
Google
we'll see.
Yet?
I gave my best attempt at a price target in 2024. It seemed, when I actually was writing it, it seemed a ridiculous exercise because it's such a long amount of time and so many things are absolutely going to happen. But I picked ultimately 4430, and sorry, my kids are. I picked ultimately 4430 on the SPX for a pretty simple reason, and that was markets go up about 7-ish% a year. And if you look at the distribution of returns in the SPX, there are 15 huge outliers. Obviously, the meme 7, and then, like Adobe, Intel, AMD, a bunch of AI and tech heavy mega cap kind of things. So it's like the AI play is a very outsized influence.
Yeah.
And then Costco, right?
Yeah.
The ultimate AI speculative play. Costco's in there.
I'm short Costco right now.
If you remove those 15 stocks, you go from like a 24% return on the year to an 8% return. And the remaining stocks follow pretty much a bell curve, which is like, your 8% a year return in the market. broad distribution, you'd expect kind of this, bell curve diffusion binomial type thing. So if you continue that, and that 8% on the year would put us around 4,100 something. And if you propagate that 8% forward, you get around 4,430. Because I don't think I'm betting that AI doesn't have that much of a runway left, given the macro, and it's already had enough time to try to pull in money. And I think all of the easy money to, get all these companies moving and making shit has already been dried up. And now all those investors are going to want to see results. And there's nothing really to give them because AI is bullshit. And so I think that that's going to start coming apart before the year end, which, and once we deflate those 15 AI stocks with Costco being the ultimate AI play, we're back at 4,400. So that's where I'm at.
That makes sense. I can see that for the end of the year. So, I mean, for 2024, I think it's more likely we see an event in the first half, just because of the bank term funding program. So I think March is the most likely period for any kind of tail event. And I think if we saw one, say 20-25% correction, I think that could recover, roughly 18 to 20% by the end of the year. That's if we get the soft landing, right? But I think well, actually that's if we get the hard landing. If we get the soft landing, I think we get a steeper correction, but a better recovery. So I think we get I think that's where we see our 30 to 50% correction. If everyone has to go, if the carry trade collapses, basically. But then I think we get a much faster recovery. Also because, the Fed's going to massively ease, right? So we're going to get QE if that happens. And then, our recovery is going to be accelerated. So I think we get I think we bounce out at 25 to 35%. Or at least that's kind of my thoughts on it. A correction in the back half of the year would definitely leave the markets closing far lower at the end of this year. But yeah, I think too much is hinged on BTFP staying open. Otherwise, we're gonna start to get if they close it, we're gonna get a very, very tight financial conditions, right?
Yeah. Yeah, I mean, 4430 to me seemed about right. I mean, the upside risk is AI bubble lasts longer than I expect, which, takes us to who knows where we go, right?
Yeah.
And then, but there's so many other things on the downside with, macro, global productivity and output. I can see 3,800 again this year. Be not crazy.
I don't think that's insane. But the question is when, right? There's definitely a lot of variables as to the when. Hopefully,
at open on futures, they're going to open down.
Hopefully,
29%.
Hopefully, we're ahead of it, right? All right, projections. Do we want to do those, or do we not give a shit?
New year, it's.
We got through an entire week with nobody bitching at us about them, and I kind of liked that.
They can keep that up.
There's too much on that. Who knows what? Everybody's strategies are going to be different. Just give it a week to play out. I mean, I'll give you one if you want one. But
yeah, gun it. Fuck it. Who cares?
Down 2% this week. I don't know what that is.
Oh Jesus. Hold on. Down 2%. You don't even know what the value is. It's 4670.
That sounds less intense than. Yeah, that sounds right. Let's do that.
Okay. Dork?
Okay. Yeah. All right. Gap up at open. So we open at 47.80 tomorrow.
Okay.
Close tomorrow at 47.65.
Ooh.
Next day open 47.70. Close at 47.55.
Hold on. 70, 55.
Yep.
Okay, Dork. I hope this isn't rude, but I have to. I showed this to all my kids, the Tom Green video, and listening to you do this, I'm just imagining you being like, and a little bit more lettuce.
That's exactly what I'm doing, Jay Fresh. Wait.
Wow, good for you.
Okay, so next day, open at 47.40, close at 47.50, and then I think that's the whole week, isn't it?
Yeah. No, Friday.
Oh, I'm missing Friday. Okay, Friday, we open flat and then close at 4,700.
Ooh. Very bearish on the back. You guys are so bearish. I wasn't ready for this level of bearishness.
It's kind of on brand, isn't
it?
Yeah. All right. You cunts. Now I need to either be more bearish or more bullish.
Yeah, just go to 4,800. Make it happen. I mean, you know that everybody wants a new all-time high.
That is
Okay,
That's
true.
something I didn't consider.
so I think I'm gonna go with we open lower tomorrow.
Because we haven't done that in a year.
Bounce 47.80. Oh shit! I just destroyed it. Hold on. That's too high. Bounce to 47.75. Then Tuesday, PMI data sends us through gamma neutral. It's going to be higher by then, right? Fuck me. Why does it keep closing my shit?
Quit double clicking. I bet that's what it is. Trading views, something like that.
Wonder where gamma neutral is going to be by then. Let's say we test 4,700 Tuesday. Bounce on gamma neutral. There.
Okay, now I'm a little worried because I feel like the power of round numbers and all-time highs are a very strong force.
Yeah, we've thought the all-time highs would be a strong force in the last like 3 weeks, though, and so far they've failed to even come close to achieving them, and the upside's even weaker now than it was.
Yeah, it would be really poetic just to watch all these people who are so convinced that we're going to hit an all-time high.
Just
We
not
just
ever
miss
get
it by
there.
like $3.
We're way further than $3 off, aren't we?
No. The all-time high close was only like $3. It was like 4796 something, and we closed once at like 4793.
I thought it was all-time high is 48.20, right?
Yeah,
But
yeah, yeah. But I'm
that
talking about the
closed.
close. That's intraday.
Oh, 4793. We're gonna break it up into open.
Oh yeah.
Just fuck
Oh
that.
yeah.
No, all-time high peak, or it doesn't count.
All right. Well, I don't make the rules.
Neither do they.
Oh, also your final trading day of 2023. I see it here. I see it's like a footprints in the sand, but I can't read it because I have glaucoma. Is there a place I can find that picture on the Discord?
Oh, the fucking.
The pair of footprints and the.
Oh, I could read it to you. That would be a perfect
Oh
ending to
well.
the stream.
What? Are you sure? If Dork is okay with it.
I said,
Oh, okay.
so I think Pigeon Teeth didn't make this one. This one was Flock of Steagles. I dreamed I was walking along the beach with Girk. Across the sky flashed bags I had held. For each bag, I noticed two sets of footprints in the sand. One belonged to me, the other to Girk. When the last bag flashed before us, I looked back at the footprints in the sand, and I noticed that many times along the path, 1 year of trading, there was only one set of footprints. I also noticed that it happened when my port was the lowest. This really bothered me, and I questioned Girk about it. Girk, you said that once I became a Dillionaire, you would tell me whether to buy puts or calls, but I've noticed that during the lowest times in my 1 year trading career, there was only one set of footprints. I don't understand why in times when I bought the dip and it kept dipping, you should leave me. Girk replied, this is the stock market, grow up.
Okay, that's pretty awesome.
That was pretty fucking funny. Anyway, all right. Thank you guys
That
so
is
much.
a perfect beginning to the new year.
It really
Oh,
is. Thank you guys so much for coming on. I appreciate it.
Thanks for having
Always
us.
fun.
Happy New Year to both of you. I hope you enjoy the rest of your day.
Yep,
You
you
too.
too.
Later, bud.
Later, guys. Everyone else, thank you so much for tuning in. Happy New Year. I will see you bright and early tomorrow at 9 a.m. Pickles Picks will be out tonight. I'll be on my computer probably for the rest of the day if I don't pass out. Hit me up if you have any questions that you didn't get to ask on the stream. All right, guys. Later.